I rise tonight to speak on a matter of importance for beef producers in Australia, but in particular for beef producers in northern Australia, described in a survey by the Meat and Livestock Authority as being those properties above the line that would be reflected by the New South Wales Queensland border that takes us all the way through, of course, to the northern aspects of Western Australia. Mr Acting Deputy Speaker, since 2004, farm debt in our country has increased by some 75%, up in dollar terms from $40.3 billion in 2004 through to approximately $70 billion this year. One of the statistics or indicators of concern associated with that debt is that a figure established in 1980 was that for every dollar of debt a producer had, or a private farm enterprise had, generated $3.12 or $3.12 per dollar in gross income. When last surveyed in 2010 by ABARES, that figure had collapsed to 64 cents for each dollar of debt that farm enterprises' gross income generated. So of the national debt that I've referred to, Mr Acting Deputy President, Queensland producers are responsible for about $16.9 billion worth of that debt, which equates to 36% of the national debt, yet we don't have 36% of the GDP of agricultural production in our state. In particular, whilst each state and primary producers across the country have had their challenges over the last decade or more, I would argue that primary producers in Queensland, particularly in agriculture and particularly those in beef production, have faced more challenges than most, accompanied on some issues by those in the sector in the Northern Territory and northern Western Australia. These primary producers in beef cattle production in particular, have battled the force majeure of droughts and floods and cyclones and the impacts that occurred through the cessation or suspension of the live cattle trade in 2011. And indeed, Mr Acting Deputy President, some of the issues associated with those decisions are still working their way through the balance sheets of some producers in the Northern Territory, northern Western Australia and indeed northern Queensland. So the increase of debt that has occurred has been applied largely to the purchases of property, additional property, in response to a trend of get big or get out that occurred in the last decade to 15 years. And additionally to farm improvements and also capital purchases on farm for plant and equipment. Now, it is well known, Mr Acting Deputy President, that many of these producers who now find themselves in trouble were the darlings of their financial providers as recently as 4 or 5 years ago, and certainly up until the event of the global financial crisis. Over those years, because of the incident of some improvement in property values, which I will refer to later as having declined, many producers were able to borrow more money against the value of their assets, and in many cases this money was applied in depreciating investments or for stocking purposes, or indeed general operational purposes, in the belief that by subsidising the operations of their property for a period of time, that their fortunes would turn around. And that is to say that they'd have a break in the weather, the dollar would reduce, market demand would increase, and the fortunes of the live cattle trade would improve, indeed quicker than many of them had hoped. Now, in subsidising their production and operational costs, many of these producers have in fact artificially subsidised the cost of beef production in our country. And when those sorts of things happen, Mr Acting Deputy President, it can sometimes take a number of years before the impacts of that are felt on the balance sheet of the individual primary producers, or indeed across the industry. We've seen these debt trends about 10 years ago commence with agribusiness banks offering low interest, interest-only loans. Now, these for the non-sophisticated borrower, of which many of these producers are, and I don't say that in a depreciating way. I say that in the sense that many of these producers are not necessarily sophisticated in the ways of big finance, much in the same way as we've seen through the recent revelations of the Commonwealth Bank here in Australia. This is no less the case when bank managers and agri-advisors within banks are giving advice to primary producers about their expansion programs, encouraging them to borrow money, in this case in particular, interest-only loans, some with terms of 10 years. Now, this is soft credit. This is soft credit into what arguably ought to have been seen as a subprime market, in the sense that the wrong time to borrow is when there's grass up to your knees and the dams are full. But that's what was happening. These agri bankers, and including in many instances banks that are part of the Big Four and those others that specialise in this space, they did not, in my view, take into account the seasonal variations that would generally present to producers, and indeed possibly could not have known, but ought to have made some contingency provision for things such as fluctuating currencies and large impact interference in things like the live cattle trade if their borrower, if their client had a big exposure in that area. So, of course, soft money like credit cards provide, where you really don't feel the effect of it. There are no principal payments to be made, just interest payments, and indeed at a time when interest rates were at an all-time low, one can cope with that until such time as it's time to pay the piper, it's time to pay the loan back, or it's time to restructure the loan, Mr Acting Deputy President, or indeed your income streams collapse for some of the reasons that I've articulated earlier in this speech, and you have a complete incapacity to service your loan. Many of these loans were 100% lend against the purpose of the loan. So, for example, many of these producers who were buying expanded land holdings were doing so by borrowing 100% of the money and using alternative properties, sometimes their only other principal place of business, their home property as it's referred to in the sector, or indeed assets that were off farm. So again, not only were they at risk, again in a subprime capacity of exposing the asset acquired, they also put at risk, in many cases, some of the only other assets they had. Tragically, for some, Mr Deputy Acting President, third, fourth and fifth generation holdings passed down through their families. So these properties, of course, with the new covenants, were subject to biannual review covenants, and the same smiling banker who left them 2 years previously and helped them to expand a business that was always potentially destined to fail, or certainly was by any other measured examination high risk, were to return into their lives. Only this time, of course, it was no longer a friendly visit. And we had the enormous tragedy, and it plays itself out still today, where neighbours with identical circumstances, identical properties, identical debts, where one of them can find themselves in grave difficulty, in fact losing their enterprise, whilst the other one has perhaps a year or 18 months longer to live. And during that time, as was the case with many properties, fortunately, in the Northern Territory, fortunes turn around, allowing these families, these business people, to reinstate their equitable circumstances. In the cases I referred to, of course, where the live cattle trade was to be reinstated and indeed prospered for many over the last 12 or 18 months. So we have a situation, Mr Acting Deputy President, where I believe that in some defined sectors of beef production, certainly more pronounced as one goes further north, and indeed by the time one gets the line of Townsville to Broome and north of there, this has had a terrible impact. And for some months now, indeed from the very first stages of my time here in this place, I have been calling for a debt survey to occur, so as industry and policy makers, both at a state and a federal level, have all the facts before them that one would need to make policy decisions that will impact on the lives of many thousands of these producers. Mr Acting Deputy President, I say that the banks have a responsibility here. I'm not a bank basher. I've had a lot of association with banks over time, and it's been my experience that if I held up my end of the deal, they have largely held up theirs. But in this case, the banks are frustrating any efforts by us to determine exactly what the extent and type of debt levels we're dealing with through what I regard as this crisis. Through many various media outlets, the Australian Bankers Association Chief Executive has said that the banks will not participate in a state debt survey. Now, mind you, that from 2000 through, or around 2000, 2001 through 2011, the banks have participated in such a debt survey with the Rural Reconstruction Authority in my home state of Queensland, and they acknowledged that by saying that they had previously participated in the survey. However, they went on to say that a number of banks have raised questions about its effectiveness, particularly given the considerable investment banks need to make to contribute. Now, Mr Acting Deputy President, I find that to be, in all of the circumstances that are known, all of the circumstances that are known on the public record, I find that as a difficult statement to accept, that the banks are suggesting, mind you, I often cringe when this is said by someone else, but with their massive profits that they have generated, much of it on occasions from people in rural and primary production, that they find the cost involved in collating data that exists with them, it's their data, and cooperating with, in this case, a state government agency to determine the debt levels. I find that to be a remarkable statement, and one that I would suggest does not accurately reflect the truth of why the banks are not participating. I understand it's my view that the banks would not want to exacerbate a belief that there is softness in the property market, and I've said before, and I'll say it again, I need to be particularly careful that I don't, or that any people making commentary in this space don't exacerbate an already difficult situation, but it is a broadly held belief that many properties are in that uncertain space where the banks will progressively and in a very orderly fashion move on those banks. Many are no longer viable, those property operators. Their loan versus debt LVR ratios are in some cases up in the 70s and 80%, which we all know is not sustainable for rural production when having regard to the return on investment that we're seeing off these properties over the last 15 or 20 years. In fact, many of them have reported through ABARE surveys a decline in their gross incomes, and most certainly a significant decline in their net profits. In fact, there was some work done in this space by the Meat and Livestock Authority that indeed showed that there were 14 different regions surveyed by them, and that we've seen losses of about 2.9% of gross turnover recorded, and they made the statement at the end of their report that the majority of northern beef producers are not generating profits sufficient to fund current and future liabilities. Now that is a massive statement and well worth repeating, Mr Acting Deputy President. The majority of northern beef producers, and I described who they were, above the line of the Queensland-New South Wales border across to the northern part of Western Australia, are not generating profits sufficient to fund current and future liabilities. That is a very disturbing statement. In the same period that I reported the increase in borrowings, we had an increase in non-viable properties, non-viable business operations on properties increased from 1% to 6.5% at the same time as there was a 75% increase in the debt. So, Mr Acting Deputy President, it is essential that the banks of Australia participate, in this case, in a debt survey in my home state of Queensland, without diminishing the circumstances of many primary producers in other states. I would have to say that given that 66% of the nation's herd is in Queensland, the number of producers who are affected by this subprime crisis in agriculture are probably greater, and given the circumstances in northern Queensland with the run of droughts, fires, and then of course the impact of the live cattle job, there are many producers who fit in this situation. So, Mr Acting Deputy President, only a pigeon knows how to get to where they're going when they don't know where they are. That certainly would not apply to the agricultural sector in my home state, nor the banks. And I say to the banks, I've been moderating what I've had to say to date. I've been persistent over these last 3 or 4 months, but my patience like the capacity of primary producers is running thin, and they are called upon to immediately respond. Thank you, sir, for the